oil prices, and remember, while they have been gaining for many weeks and months, but they are trading off their two-year highs as of now. This is ahead of the OPEC meeting on Thursday, where the markets are now anticipating and preempting on what really could happen. And the concerns really come in on the stand that there is uncertainty on Russia's resolve to extend the output here. Russia actually is looking to increase production from its Sakhalin project by nearly 250,000 barrels per day. So that is a bit of a concern right now, and that's made its way to the prices. But joining us to talk more about the crude and this meeting as well is Peter McGuire. Peter, hi, good to have you in Mumbai. You are headed to Vienna for this OPEC meeting. What is your sense? What are you preempting? Which direction do you see the talks and the meeting, yielded really?
Well, I feel as though at the present time you would have to think that we'll see a production cut extension, probably 3 to 6 months. I feel as though that the next meeting in May 2018, I should say, will be very, very crucial. So over the short term, that extension cut, just as an extra 3 months, maybe an extra 6, the jury's out on that one. We need to see how Russia's positioned to play in there. And certainly as far as the Saudis and the other OPEC producers, they must be enjoying these current prices, and we may see further moves to the upside in the short to medium term.
So Peter, what is your sense, given both the scenarios? Suppose there is an extension of the output cut or there isn't. In both these scenarios, what is the case study? How do you see the crude prices reacting?
I feel as though that if we do see those production cuts, you'll probably see WTI trade at this, 57 to say $60 range, 62. Brent may touch, just south of 70, $68 handle, 67. If the cuts don't go through, there's the other side of it. I feel as though that the market will wash out. Probably it'll, maybe take off 7 or 8% very, very quickly, and go back to that, range-bounded volatility that we've seen and become accustomed to over the last couple of years.
Oh, well, yes, the volatility in the crude prices has been very, very high. But, Peter, apart from this 30th November OPEC meeting, the other things really are the geopolitics, the US dollar move, the whole electrical vehicle story that has been on in 2017, and, of course, the Saudi Aramco and the IPO. So, do you think, or what are you picking amongst all of this as we get into the new year?
I feel as though that if crude moves higher from here, it's certainly going to attract, no doubt, more shale producers coming online in the United States. Export numbers will only increase, and through technology and innovation, these particular shale, and it is truly a revolution, have been able to save as far as costs, now close to about $40 a barrel to retrieve. So there's plenty of upside for those guys, and that will only continue if you see elevated pricing. So that's the trade-off that we're going to see in the market in 2018. The other side, of course, is the Saudi Aramco float. The IPO sometime in 2018. Naturally, you want to see higher numbers, better for a valuation perspective. And the advent of new technologies, you think of the electric vehicles, you think of new ways of doing things. This could be a little bit of a last hurrah for the OPECs and non-OPEC producers. You might see, back up to close to that $70 range. Let's see what happens as far as US dollar in 2018. If you don't see, continued rate rises, then you'll probably see a softness there of US dollar, and naturally that'll probably push commodities higher. So 2018 will be a very, very volatile year, I'm sure.
Sure. That's about the crude oil prices, but because you mentioned all of those commodities, it has been the industrial metals which have run up, and how. Just before we let you go, what is your sense on the metal space? What factors would you watch, and any top pick or favorite that you have in metals?
You'd have to think of nickel. I mean, it's had a nice run up, and I feel as though that's probably underpriced at some extent at the moment. I've just looked at some charts, and you look at the historicals and you look at the fundamentals. I feel as though that's probably got plenty of upside. Copper probably similar. They've been really hit hard. I mean, those metals were smashed to the downside, and they're recovering, but they're still, there's plenty of room for further growth, and I feel as though that 18 will probably carry on from where 17 was, a good year for base metals and probably even for precious as well. So it's moving up, and I think there's probably more upside for those, as I mentioned, the nickel, certainly for copper and its little brothers.